Hey, good morning, everybody. Yup, I've got some of the net flows on the screen. We're going to talk about that and what I like to look for first thing in the morning. But first, some stories or news to break. All right, let's talk about what I wanted to talk about first. Okay, so here's the catch. Fed Reserve loans 152 billion in borrowing. In the past week, 300 billion in borrowing from these banks. Well, shit. I mean, we're not printing money, we're just loaning it out overnight to safeguard these banks. Do I believe it? Not really. Okay, First Republic Bank gets $30 billion in deposits from competing bank. Okay, what does Bill Ackerman say about this? Regarding large banks providing 30 billion to First Republic Bank, it's basically spreading the risk of financial contagion to achieve a false sense of confidence. Now, you've all heard me talk about a false sense of confidence before. For example, we have false sense of confidence. I'll make four great trades and I'll be like, I am on fire. I cannot miss. I'm entering blank, blank puts or blank, blank calls. And it goes the opposite way. And what do? I double my position because I have a false sense of confidence going, I know I'm going to be correct about this trade. I've been right about 9 straight trades. So obviously I'm going to be right about this one. And then it goes down even further. So again, these big banks depositing with First Republic Bank. Bullshit to me. That's what I'm calling. Okay, next, we all hear me mention Baidu, Bidu, Chinese company. I mentioned anytime it's under 135, and it was 132 the other day when I brought it up. I said it's a good investment. It'll likely ride up to 145, 146. Okay, great. Where was it yesterday? 128. Pre-market down 5%. Market opens, market closes. We all know the market ripped higher yesterday. Baidu finishes up 3%. Then it's announced overnight that Beijing gave their first contract for robo-taxis to who else but Baidu. Okay, then you've got Amgen, more cost cutting, more job firing, pushing Amgen higher. You have FedEx. FedEx came out with their earnings yesterday. FedEx, it was popping. It was as low as 192 yesterday, closed at I think 204, opening this morning in the 225 to 227 range. Now, FedEx acknowledges that there's a slowdown in shipping. Slowdown in shipping, well, all they do is ship product, yet FedEx rips higher. Why? Because their earnings came out good because of additional cost cutting. So how much cost cutting can continue? I mean, can you just continue to cut costs, cut costs, cut costs? You're going to have no place to work out of if you keep cutting costs. Then finally, let's understand why the markets ripped yesterday. 80 to 90% of trading on a daily basis is done by algorithms and done by computers. So as the market's ripping higher and you're like, hey, I'm looking for that turnaround, I'm looking for that rejection, it just pushes higher. And that was me yesterday. Yesterday, I was doing a small move. I had to move a bed, number of boxes. I had to get a dog from a groomer. I had to pick up some other items. And then again, I'm getting over the flu. 2 days ago, I was sick as a dog. So I wasn't really focusing on the market yesterday. What were my two biggest mistakes? I tried to call the reversal. The SPY was hitting a dark pool level, and I'm like, okay, time for SPY puts. I didn't let the reversal happen first, which is something you need to do. You need to look at the 1 minute and 3 minute. Just don't assume that you're going to be right. And then I did the same thing with coin. I got stop lost out of two positions, only two contracts each, lost $190, $180. Okay, I had a good morning. I was in Boyle. Remember Boyle? Boyle, I'm in at 493. I sold at $5.30. I took 75% on my options. Somebody said to me, hey, dude, you got out way too soon. No, I didn't. Boyle's down 7% pre-market. My positions in Boyle would be flat and my options position would be negative. Instead, I took 75%. So small account, medium account, large account, it's always good to take profit. Want to bring up Amazon because I spoke about Amazon yesterday. Understanding Amazon hit $100 a share. Amazon really needs to break through $102 to $104 for me to be bullish on Amazon. Yes, we had 4 days of inflow. Amazon's been popping, but understand there's tons of shelf volume right at the 102 to 104 range. Yeah, Josh, I see that. Okay, clients from Charles Schwab pull out $8.8 billion this week. So not a big believer in Charles Schwab. For me to be bullish in the market, are you ready? Because we're going to talk about the SPY levels of resistance and support. For me to be bullish on the SPY, it needs to close above 397 today and hold that close. So the fact that we're starting out down on the SPY and it's sitting at what right now pre-market? Let's talk maybe 391. 392. Okay, well, it's going down. It's going to touch the 391 level. Why? Because we're going to talk about the dark pool levels. And I was actually hoping that we see 390 today. Let's remember, earlier in the week, and I'll talk about some of my trades, I was extremely bullish, okay? Pinterest on Monday, I spoke about that pre-market, and I mentioned I was in at $23.44, and I was expecting Pinterest to go to $25.70, up 15%. Well, it went higher than that. It went to $26.50. Those $24 calls that I was in at 50 cents each went to $2.50. Me, I only secured 120% profit because I exited out on Tuesday. But if I let my strategy play out to fruition, I would be much more successful. Okay, I spoke about the SPY level. Okay, Fed expectations. Now, after the banking crisis, the Fed expectations from a 50-point basis raise March 22nd, all of a sudden at 44%, became, or 71% chance of that happening, went down to a 44% chance of zero raise. Okay, 0% raise coming Thursday. Now it's up to 25 basis points. That's what's expected on Thursday. We've got earnings that came out and earnings that are due out. FedEx, Groupon, MMAT, Playboy, Maps. What else interests me here? SST and Beat. Then what else happened? Kathy from ARK. Her fund got the most inflows she's seen in the past couple of months. What does that mean for the market? It means she's going to keep investing in those shitty fucking stocks, and those shitty fucking stocks are going to push the market higher. Not a huge supporter of Kathy from ARK. JP Morgan came out this morning and they say quantitative tightening is effectively over. Is the Fed still pretending to shrink their balance sheet or not? JP Morgan says it's over. Again, Kathy Wood, ARK sees biggest inflows in nearly 2 years. It wasn't 1 year, it was 2 years. But again, her ARK is the fund that she goes and she'll buy not only Tesla and Nvidia and things of that nature, but she'll go into beat up companies like TDoc, Affirm, companies that don't have earnings, speculative companies. That just gives her more power to push these companies higher. And when you see those companies higher, you'll say, okay, Affirm's going higher. Well, shit, Upstart should be higher. Oh, Upstart should be higher. SoFi should be higher. Oh, SoFi should be higher. Oh, the whole market's higher. And then the computers take over. They follow the algorithms and they keep buying and pushing it higher. Now, the same is true when they sell off. Understand days that they're going to be sell-offs. I'm not saying that's happening today, even though today is quad witching, which technically isn't even quad witching because one of the quads is no longer being active and hasn't been actively trading for 2 years. So we're like triple witching today. Let's call that. What else do we want to talk about today? I made my mess up on SPY already. I mentioned I got into SPY puts. I was expecting it to reject 395 and change. At 395, I got in yesterday. I was out within 18 minutes stop loss hit. All right, so we can talk about some stocks. We could talk about, let's just see what I do on Discord every morning. First thing I do is I want to go and I want to check out the market net flow. I check out the price or the premiums for calls, which is this green line, the price or premium for puts, which is this red line. Both are ascending. So what does that tell you when both are ascending? It means those investing in calls have not given up, have not secured profit. Those people buying puts haven't thrown in the towel yet. They haven't said, oh shit, the market's ripping higher. I give up on my puts. Let me sell and take a loss. They're both extremely aggressive. People that are bearish are buying more puts. People that are bullish are buying more calls. Okay, so then we get back to it. Again, what do I look at next? I'll go down. That's the net flow. I'll check out the algorithms. Yep, that's what I do. So I check out the algo flow for the market. What we can see is we got the stock price versus the algo flows. So you could see one of them, the stock price, especially of the ETF of the market, is extremely high. The algorithms think this is right. They're all in line. And then the algo said it should be lower. We should be in the 390 to 392 range. Where are we sitting pre-market? 391.88. Again, when I started this broadcast, we were at 392, and I said, yeah, we're likely dropping down lower. Let's remember the real major support was at 388. The fact that we spiked up from 388 to 394 to 395 to 396, that's all the computer-driven algorithms, in my opinion. Again, you have an opinion. And remember, I'm short-term bullish, long-term bearish. I'm more bearish going into today. I have some positions in UVXY and VXX. VXX extremely risky, levered ETF. I entered in at $51.96 yesterday. What happened? It dropped a whole $2 or 4%, or actually 3.5% from when I entered this morning. Let's just see where it's at. And then I'll talk about some stocks as well. I got to sign in first. That always helps. All right, sign into my account and let's see where it's at. Bum, bum, bum. Okay, the VXX is up 4.62% this morning. So it's at 52.79 pre-market. Again, I entered into it at 51.96. What happened after I went into it? 51.96. It continued to drop, just like the UVXY continued to drop. But I'll talk about my trades in a little bit. Let's go back to Discord again. So flows versus the algos telling me that we should be back in this 391 range. Well, the algos are right because that's where we're sitting pre-market, and I don't mind that because I'm going to open up very green. Then I'm looking at the flow sum, which is the flow sum for, did I do the market or the SPY? Let's just see. I did the flow sum for the SPY. So this is telling you all open contracts on the SPY. So let's look at open interest. Well, call side, you have 2.3 million open interest contracts. The put side, you're still at 6.91. Understand, yesterday there was more of a 50-50 breakdown, calls and puts for options expiring today. When you go out just 1 week, when you go out 1 month, puts by far outnumber calls. So when I'm showing you guys the flow sum or the sum of all the flows and it's more bearish, don't be surprised, even though the market was ripping higher yesterday. And then finally, I'm going to go to my favorite level of the dark pool levels. And again, I'm looking at this level right here, 395.35, 34 billion on the shelf, the largest volume right here at 395.35. So when I was telling you yesterday and it crossed 395 and I was expecting the markets to drop and they didn't drop, they pumped up another dollar, another $1.50. I was in awe and shock, and I'm like, how could I just be so wrong? I was so confident in my position, but it turned out wrong, got stopped out. So let's see what we're looking at today. Again, levels, 395.35, but let's not even work on that level right now because, again, yesterday we went straight past it to 396. So let's look at the level this morning, and again, the SPY is sitting 392 flat, 392.06 right now. So I'll go to the SPY level, and I'll say, okay, we're sitting at 392. What could possibly happen? Well, we have a dark pool level of 392.67. So I say to myself, okay, let's say the market pops up and makes up some of the losses overnight from the futures. Where would I expect it to reject? Well, I got 392.67. Seems like a clear possible rejection point. Again, you can go plus or minus 20 cents. You can go 392.50 to 393. And let's remember, the other day I mentioned looking for the high side, 392, 393. There it is right here. And that's why. Now, understand, if we drop, you're kind of in a smaller zone here. I won't call it a ghost zone because a ghost zone is when we're at 2 billion or 3 billion. We're at 13 billion. That's still a pretty substantial number. So you're looking at 390 flat. So again, if I were going to offer a prediction, bull or bear today, I would say, yeah, there's a good chance the fact that we're opening up at 392 flat right now pre-market that we touched 390. And again, plus or minus 20 cents. So if we drop to that 390 level, there's a good chance we see 389.60, 389.80. At that point, if I am bearish, which is the positions that I carried over to today, where would I get out? And I'm saying to myself, just under 390 is a good point to secure profit. We'll get to some questions. Yeah, I mean, Fredo, you held the coin, $67 put, got to sell it market open. Yeah, I mean, coin is ripping. Why? Because Bitcoin is ripping. However, if I'm in puts and they're negative, I might set a high ask and hope for some volatility at open and take a minimal loss on that. However, if you're so far out and say you're down 50, 60, 70% and you did not use a stop loss, first off, strategy real quick, strategy for everybody. 3 things you need to do when you're trading options. Number 1, cash account. I don't care if you're trading $100, $5,000, $10,000. If you're trading above $25,000, you don't need a cash account because you can go in and out as many times as you want. But the rest of us that have to worry about PDT, yes, I'm going to say cash account. Even on Robinhood, they'll let you switch to a cash account. Webull, cash account. I believe moomoo even has the option to let you switch to a cash account now. Why is that important? First off, you're not going to overtrade. You're not going to trade with money you don't have. You're not going to over lever yourself. Once you're in a trade, you can secure profit anytime. I remember one story that I told. Netflix earnings like 2.25 years ago. It was second quarter of 2 years ago. I was in Netflix options. My options were worth like $23,500. I went to sell them. It told me you're going to be flagged for PTT. I was like, oh shit, I don't want that. Okay, how much can I lose out? The account opened the next morning from $23,500 to $1,500. So yes, please, cash account is key because you are allowed to sell. Now, I should have sold anyway. I should have secured profit. I should have took my trading to a different platform if I was worried about that. Okay, but coin is at $71. Even if coin is to go down, you're looking at probably like $67 and maybe like 66.90. I mean, so if you're in the $67 puts, you're still not going to make money or that much money. Again, I hate to sell after it's spiking like this, but why is it spiking? Let's look at crypto. Crypto overnight, Bitcoin up $1,500. This is after Bitcoin ran up from, what was it, 20,000? 21,000 flat 5 days ago. So we're at 21,000 now. We're at 26,500. You're talking about an increase of what? 27%. Now let's remember the equation. It's like a 3-to-2 equation. So when I say, okay, 27%, how much can Coinbase actually appreciate? I would say, okay, take 1.5 times the 27%. You're about 40%. So when I look at Coinbase, and let's go back to Coinbase, and I go, okay, it could rip about 40% from the lows. I'll go back to the lows, and the lows were $54. So $54 or 55, let's just say 40% of that is 22 points. From 54, you're going to 76, and Coinbase right now is at 71. So in my opinion, Coinbase can rip higher. Again, yesterday I traded 2 Coinbase puts. I was like, I really shouldn't trade this. Coinbase looks so strong right now. I just have a feeling it's going to turn around. Guess what? Feelings versus momentum, which is going to win out. Feelings rarely win out. Momentum usually wins out. So again, I made a terrible play, 2 terrible plays yesterday, but I did make one great play yesterday with Boyle. And again, I sold Boyle a little early. It was like $5.28. I got $35 for my options. My options cost me $20. So I returned 75%. Somebody said, hey, you sold that too early. Yes, those same options went up to $45 a contract. So I gave up, 125%. I secured 75%. I left 50% on the table. But again, risk versus reward. Okay, so let's talk about some other stocks. U.S. Steel came out with earnings. They beat. They were up as much as 5%. What's likely to happen for U.S. Steel, which is the symbol X, is they're likely to fade the rally. Same with FedEx. Again, they've been buying. They offered a dividend. What was it? A couple of weeks ago, the dividend went out. Last 5 days, FedEx is ripping. Now, if I'm going to fade FedEx, I'm not going to fade it today. I'm going to wait for FedEx to slow down, to have some outflow, and then I'll look to fade FedEx. I mentioned DraftKings. Remember DraftKings, $17.50? Well, my exit strategy, does anybody remember? $18.81. That was it. I called it $18.81. The high yesterday, $18.82. So again, sticking to my strategy, I would have had even better profit there. Carvana, I was looking for $7.51. The high yesterday, $7.59. These are all options I entered in earlier in the week. $7.59, my exit would have been $7.51. Again, I just have paper hands. Now, there's one thing you can't control about yourself. It's the way you trade, but you can remind yourself, dude, Matt, you just have paper hands time in, time again. So please hold on. I mentioned that. I mentioned Boyle. It's down 8% pre-market. UVXY is shooting up 8%. It's over $6. So that's going to be an interesting thing because we could actually see it rip higher to $7 if the market struggles and tanks today, or it'll go right back to $5.50 if the market shows support. So again, it's all about your risk, your money management. If you think the markets are going to drop to 388, then you're going to hold your UVXY till $7. If you think the markets are going to get bought up on every dip, then shit. You want to get out. You want to secure profit on open if you're bearish. Energy ETF, XLE. Remember, I got in at $77.15 a day and a half ago. I sold yesterday. I took a 6% loss. Right after I took the 6% loss, what happened? XLE ripped up to $78. So again, I had great strategy. I knew that energy was sold a little too hard, and I wanted to be in energy. That's why I was in Boyle. That's why I was in XLE. However, I'm just a puss. What can you say? I mean, I saw it going up. I'm like, okay, let me just secure a 6% loss. Understanding those options were down like 56%. And I did not double down when they were down 56% because I was more wary. I'm like, okay, maybe I won't be right. Maybe the XLE won't go up. Maybe it'll continue to sell off. No, I was right. My strategy was good. So my strategy was good on DraftKings, Pins, Carvana, Boyle, XLE, SPY. What's wrong with me is that I have paper hands and that my timing is a little off. Sometimes I am too early to get into a trade. Now, somebody says, hey, what about FRC? It's down 22%. May not be out of the woods. Yeah, that's First Republic. That's the false sense of confidence I spoke about in the beginning of this live stream. I mentioned Bill Ackerman said how terrible it is that these larger banks are depositing with some of these smaller banks to give them more support because it's a false sense of confidence. Nothing changed on the balance sheet of FRC. So yeah, I would stand clear. Now, if you want to trade these, I mentioned a trading strategy for some of these smaller regional banks. What the trading strategy is, you go out of the money, you go about a month out, and you go out of the money. So FRC, it's trading at, let me just see where that is, $34, down 22% this morning. So let's say it's at what, $20 right now, $26. I could go out of the money. I can go 2 months out. I can look at the $40 calls, even though I don't think this bank is going up. And I bet you I can get them real cheap and make 100%. Same thing. If you go 2 months out and you look at like the actually, you can't look at $20 puts because it's already down to $26 pre-market and you're going to pay up for the IV. So you can't do that necessarily, but you could look for a bank that might be ripping higher yesterday. Maybe Western Alliance, was up 14% yesterday. It's down this morning 9%. It's at $33. So you could look for a pop back to 40. At $40, I could say, okay, I'll buy the $25 puts. I'll go a month or two out. I'll pay relatively nothing, and I'll look for 100% return because of the volatility with these smaller regional banks. Volatility is good for day traders. It doesn't mean you necessarily have to be right and hold these 2 months. You could be in a day trade. You could buy this option for $20. You could set your ask as soon as you buy an option. Here's what I do. My strategy again. I set my ask as soon as I buy an option for $120. I set the ask. I go, okay, I'll sell it for $240. I turn off my phone. I don't have to look at that option. I know if it hits that 240, I'm going to be damn happy making 100%. I don't have to watch it going, oh, there it is, 236, 222, 218. Oh, it's going the wrong way. Okay, let me scare sell. No, and that's what I usually do. When I stare at my screen, that's what brings about the problems of me selling an option or position too soon, because I see the pattern about to happen. So if my position's about to drop, I'm like, let me get the hell out. I mentioned earlier in the week, I was going to exit out of some of my options and buy them 50% cheaper. Well, I exited out, then they went 50% cheaper, and then they spiked up 100%. But I didn't buy them 50% cheaper because I was like, oh shit, they're going down. I'm going to wait. I'm going to let them go down even more. So that's just a strategy you can use for that. I mentioned Baidu. I would get in Baidu at $132, $133. Pre-market is sitting at $144. Do I want to get into Baidu and China at $144? Heck no. Great. They got the contract to provide robo-taxis. What does that add to their bottom line? Probably nothing right off the bat. I mean, it's a contract to bring robo-taxis to Beijing. Now, what's going to happen when the first robo-taxi kills somebody? Oh, fuck. I don't know, but I wouldn't want to be in Baidu's shoes when that happens and the robo-taxi and the Chinese government says, yeah, we're going to discontinue the robo-taxis because they ran over 2 people at stop signs or whatever it is. Let's remember what happens in Beijing. Does anybody watch those videos when they cross the street? Cross the street. You have hundreds of people crossing the street. You have bicycles all over the place. China, bicycles, very, very popular. In the US, not so much. You don't see bicycles and just lines of bicycles interacting with cars. In China, you do. Robo-taxi, bicycle, boom, dead. That's it. Okay, so let's skip. Alibaba, I mentioned stay away. Okay, Salesforce. Remember Salesforce? It got the earnings pop, and I said you could fade the earnings pop. But what do you see the last 4 days? Inflow, inflow, inflow. Let's remember, last Friday, I got into some Salesforce options. I was a day fucking early. Yeah, I just cursed. Sorry about that if you have small kids. But the point is, 4 straight inflow days, the stock spiked from 172 back to 187. 15 points. That's 12%. Understand, I was just a damn day early again. And I hate being early, which is why another rule that I like to give out or a lesson, I like to dip my toe in. So I'm going to go into an option position, whether it's calls or puts. I'm going to buy one contract. 2 contracts. When I got stop loss yesterday, I was only in for 2 contracts. I wanted to take a bigger position, but I got the stop loss. Anyway, let's keep going. That's Salesforce. I mentioned NVIDIA. I mean, NVIDIA is just crazy. I mentioned it the other morning, 2 mornings ago on YouTube. I said my entry would be 233. My exit would be 240. Well, shit, it closed at 255. It was as high as $260 pre-market this morning. We could look at Tesla, Amazon. I mentioned for Amazon to be bullish again. 4 straight days of inflow from Amazon, where you can see Amazon was it was $90 a share. Now it's up to $100. You're talking about an 11% move in Amazon, 4% yesterday. For Amazon to be bullish, for me, it has to close above $104. $104 would mean another 4% move upward. So again, not going to happen today. But if Amazon starts closing above 104, I'm going to be a buyer from 104 all the way to 119. Does that mean I'm bullish on Amazon? No, I actually think Amazon needs to be pulled back probably to the 94.75 range. So $94, $95, which would be a 5% drop. I think that would be fair. Why? Because the market went from completely oversold, right? SPY 383, 382, all the way up to overbought. SPY 396, 14 points, 5%. 2 trading days. Let's remember what caused me to turn bearish. I was bullish going into Tuesday's close. Tuesday's overnight action, we're talking about European banks, European small banks, regional banks that were having the same problems that the U.S. small banks were having. Has that changed? No. What happened in the European Union? Well, they just raised 50 basis points starting yesterday morning pre-market. I think it came out around 9:15 a.m. 50 basis point raise. Well, shit, if your banks are having the same issues that our banks are having, just the same way our Fed is probably not going to raise 50 basis points March 22nd. Now it's estimated at 25 basis points. 2 days ago it was estimated at 0 basis points. So, all right, let's see what else is going on here. What do we got here? Hey, how is Johnson & Johnson looking? Okay, that was one of the stocks. I still have it up here pretty high. Where is it? Where is it? Where is it? Where is it? Oh, come on. Thought I had Johnson & Johnson pretty high. I might have removed it. Oh, no, here it is. All right, 154. Again, similar chart to Amazon. Again, 4 straight inflow days. However, the inflow days haven't been as strong. Yesterday, it actually went down 0.32, 32 cents, 0.21%. So, and yesterday was a massive green day in the market. So, no, I would stay away from Johnson & Johnson right now. I would stay away from medical companies. I don't even like biotech companies. What about AMD and NVIDIA? They're pumping so hard. Yeah, they're pumping a little too hard. Understand, AMD, NVIDIA, leaders in the class, leading in the chip sector. Risk first reward. There's just too much too much risk on the table to enter in. What do we got here? Username 200 cool. Seeing Matt's channel, just stopping by. Girlfriend is sleeping. Don't have headphones, but we'll save it for the future. All right, cool, man. Listen, I appreciate that, Raymond. What else we got? Ken, got some Apple April 6, 150 puts. I think I'm pretty safe there because the dark pool levels don't show anything over 155.68. Just because the dark pool levels aren't showing you the next level higher doesn't mean it doesn't exist. Dark pool levels will show you a range that is pretty accurate. And then let's go back to the dark pool levels again for today for the SPY so we know what to look for. SPY pre-market. It was 392 as I came on live, and I said to myself, yes, I do expect we're going to see 390 or slightly thereunder. We're still a point and a change away, so we're still 0.4% away from going down to that level. So, likely we hit that level, but let's talk about the dark pool levels. Again, dark pool level, we're sitting at 391 and change. So we're in what's considered no man's land. So we could easily see a drop at open all the way to 390, 389.99, which is technically 390. 390 could bounce higher. We could be right back at the 392 level. The next level higher, 392.67. So if we get up to that level, I would assume it's going to reject. But remember, my assumption yesterday that the 395.34 level was going to reject did not come to fruition. So again, you have to watch the 1 minute, the 3 minute, and the 5 minute charts, okay? Doesn't matter what stock, or if you're watching the SPY or the Qs in general, you watch the 1, the 3, and the 5 minute. Now, how do I use these charts? I use the 1 minute chart as a sniper tool, basically to say to myself, okay, I see a bit of a reversal coming. Market's going gangbusters higher. I see a bit of reversal. I look at volume. I go, okay, now it's registering. The 1 minute's telling me we could see a reversal. Let's look at the 3 minute and let's look at the candlesticks for the 3 minute and see what kind of candlestick action we have. And if the candlesticks tell me we could drop, then I might enter into my position. And then I will use the 5-minute chart to confirm, because sometimes we see a 1 minute, a 3-minute sell off, and then all of a sudden, minute 4, minute 5, they're buying it again. So I'll use the 5-minute as a confirmation tool. All right, with that said, it's Friday. Let's get to trading. Trade safe, secure profit. Yeah, it's great to hit those home runs, but understand what makes your accounts higher is compounding. I made 30% this day. I made 80% this day. This week, I made 30%, 60%, 55%, and 80%. Compounding it, I'm up over 200% on one of my accounts. That's how you do it. You don't go in for bangers. Oh, it's Lotto Friday. I'm going to take my full account. I'm going to put it into this play because I think the market's going to drop, or I think they're going to buy the dip. Remember, they've been buying the dip probably every day, maybe 7 days out of the entire year, and we're already into March. They haven't been buying the dip. So that's likely going to happen. Again, I'm a bear today, so I'm hoping the markets rip lower and come up with a regular price or a rational price of where everything should be, because the way the markets ripped higher off the algorithms and off the computer trading yesterday, don't really like it, don't really believe it, kind of think it's bullshit. Please, if you like what I'm saying, thumbs up, join me Monday morning, 8:30, and we'll go from there. It's spring break, so I'm going to have kids home